everyone, welcome to your Daily 5. Today is Leap Day, leap year, February 29th. I am Mish Schneider, Mish, Chief Strategist at MarketGauge.com, and I would like to thank StockCharts.com for giving me this platform. So we're going to do something a little bit different today in that this last, I guess, year, really, you could say maybe 6 months or so, what we've really learned about the market is that, like the law of physics, things in motion tend to stay in motion. Whereas if you're trying to bottom pick on some of the weaker instruments not working out too well, and if you stayed with the outperformers, they continue to outperform. And so we at MarketGauge have a proprietary quant model that keeps track of what is ranking in terms of the biggest strength in its momentum. And that would be our ETF Sector Plus strategy. And the reason why I want to feature this with you today is really basically two reasons. One is I believe that these are not only the leaders, but we're going to see some of the emerging leaders will be able to layer in the ACP plugins that we have on stock charts that really helps with the timing. That would be the calendar range, the leadership, and the real motion. But what really excites me about this list of 8 ETFs is that 4 of them are in my economic modern family, and that's pretty significant. I don't think I've seen that very often. So what that tells me is that we could be seeing not only a change in leadership or maybe a rotation at the very least, but with all of the naysayers in terms of the economy, and I certainly know that inflation can rear its ugly head at any time. But if things stay pretty much the way they are, it is possible, with semiconductors being number 1, no surprise, that's my sister. Home builders, not in the family, but being number 2. XRT retail, that's my granny, number 3. That keeps going up in rank. XLF financials, we had regional banks in the family, but that's actually been really replaced by the bigger banks. Number 6, another one in my family, transportation, IYT. Industrials, XLI, we'll take a quick look at that. And IBB, which is biotech, brother biotech in my family, as number 8. So this is exciting to me. And so let's take a look at these charts and determine whether or not they're actionable right now and what we would be looking for going forward. So I'm going to cover these first 8, SMH, XRB, XHB, XRT, XLK, XLF, IYT, XLI, IBB. And from there, not only will we get a picture of what's leading, but we'll get a real picture now in terms of the inside sectors of the U.S. and technology, whether or not this rally overall is sustainable. So beginning with SMH, I mean, clearly we know that this has made new all-time highs. If you're looking just at the board today, NVIDIA is strong. Even Apple is making a comeback. We have other stocks that have been relatively beaten up, doing better today as well in the semiconductor space. Of course, that would be looking at Intel. But nonetheless, this is a very interesting chart right now because after we had our last little correction, we have now been consolidating. We have not had any kind of reversal top because even though we made a new high this day, we had an inside day, and we haven't really done very much to break that low. So what it does now is gives us a pretty good indication of what to look for next in terms of, are we going to expect another correction, or is this merely a pause and consolidation before the next leg higher? So if we look at the top of the range here, that would be up at 213.36. And I think we have to go to the low of yesterday at 206. So that gives you really basically about a $7 range that the semiconductor ETF has been working in. So it's pretty safe to say that if we break down under 206, there's a good chance that we'll start to see some erosion in the leadership against the SPY and the real motion, which we'll look at in a second. But also that could be a sign that the rest of the market might be ready for a correction, or it could be that the other family members that aren't number one but moving up in rank, as I showed you earlier, might be ready to kind of rotate, get money rotated into that. And then, of course, on the flip side, if we take a look at this high at 213.36, clearly we get to 213. Where do we go next? Since we're in new chart territory, hard to say. But we do have the 6-month calendar range all the way down here. If we were going to get a massive correction, one could assume that if it holds 187, that would be one thing. But if it breaks down further and got to the 6-month calendar range high, that would probably be an incredible buy opportunity. And we may not even see that. But what we can look at here is right now, we're still very much outperforming the benchmark, which is the SPY. But it's not necessarily flying as high as it should be considering, but that doesn't mean necessarily that it can't go stronger. What you really want to see is it taking out these Bollinger Bands. Look how many times it took out the Bollinger Band and didn't sustain. Here's one. Here's another example, only for a couple of days. Another example here, just for a couple of days. Another example here for a couple of days. And now we're not even there. So what would really make this thing explode, I think, would be if it really starts to outperform the SPY. And of course, if we look at the momentum indicator, also very interesting. We had a mean reversion here, and that was, we saw that little bit of dip here. And we had a little mean reversion here, but we're going just sideways. So I guess the conclusion is this. We have a range now, let's call it 213 to 206. We have the fact that the momentum might be declining, which means right now the indication is it could actually wind up having more of a serious correction, or at least a better correction as a buy opportunity. I'm certainly not negative by any means. And number three is we're seeing a time consolidation as opposed to a price consolidation, in which case momentum can get better. Now, XHB is not in the economic modern family, but of course it reflects a healthier economy than what many people have suspected. And you can see how beautiful this was. This 6-month calendar range, we did a whole video about it. If you look at the YouTube and find it, Jeff and I explain why this thing worked so beautifully, and clearly you had a great opportunity to get long when it broke, and then it retraced to it, and now here we are up here. So this too is outperforming the SPY, but getting right to the Bollinger Band. And as far as the momentum, this really hasn't had any tremendous momentum in quite some time. So even though this is breaking out, momentum is kind of flat. So again, whether or not this turns out to be the high as I'm speaking to you at 103.19, a lot of that would depend on two things. One, it would have to close below 102.49 tomorrow, which would be the end of the week, Friday. And number three is that this would have to do it on some kind of a volume. So this is what I'm particularly interested in. This is Granny Retail. Now, again, a really nice 6-month calendar range move higher, and then a 1-day retracement, and then basically you can see it chopped around, but once it gapped up on this day, it's been a really nice move from essentially 74 up to about 76.45. Now, what is also interesting is this is on a new 52-week high. We had an inside day. We haven't quite taken out the high of this day, so 76.84 is a number that has to clear. And look what happened here. It's outperforming the SPY, which is great, but you can see it's back down under the Bollinger Band and back down under the Bollinger Band on mean reversion. So if we're going to see this as some kind of a fake out or possible next test at either the 6-month calendar range high or the 50-day moving average, then this momentum is telling us that that's possible. But I wouldn't necessarily even count on that unless we break down under 75.25. And this would be an area that I would really want to keep an eye on, because even if we start to see the market come off and correct, at some point, I'm still 100% convinced that the consumer trends will shift on the heels of all the diet drugs, as there's going to be a tremendous number of people who have suffered from obesity for years and years and years, yo-yo dieting, now being able to permanently lose weight through the drugs like Ozempic and Wegovy, and they will become consumers of a different ilk, trying to look better to show off their new figures. So that's my theory, but right now we have to say timing is everything, and at this point it does look like maybe we're getting a little bit tired here on this Thursday. Now this is technology. It's just another ETF, but I like to look at semiconductors, even though that's more chip technology. This did not make new highs. So even though this is going sideways, look at your 6-month calendar range. I mean, all of these gave you great opportunities for trades if you had the 6-month calendar range plug-in on your stock charts. But on the leadership, we already broke down, so it's underperforming SPY, interestingly. And on the real motion, you can see that not only is it sitting right on the 2 moving averages, but the 2 moving averages are completely converged, which means next price moves could be extremely telling in terms of where technology goes. And even though we had this big gap up, if we break down under, let's say, 204, it is possible that we'll have to take another trip at least down to the 50-day moving average. And only now, this was a real reversal trade, if we take out 208.47, does this continue to go up. Momentum is suggesting, though, a little bit tired. And yes, this is number 6 in the trend strength indicator that I showed you. This is transportation, super important. A lot of the reason why this went up was because of the incredible price rise in Uber. But nonetheless, what we're seeing right here is the same thing we're seeing everywhere, which is this massive sideways time consolidation in price. And so the market is definitely getting ready to do something, whether it's get another leg up in the modern family, which obviously would be very bullish, or get ready for a bigger correction, remains to be seen, but this is outperforming the SPY. And it did have a little bit of a mean reversion here. It's had it a couple of times, but like I said, the price hasn't really done very much. Now, what is interesting is that if you scroll back a little bit on this, at 281.45, yeah, 281.45 back in 2021, where we saw so many other instruments like the NASDAQ and the SPY making new all-time highs. This only recently got up to 282.26. So this actually made a new all-time high and is now consolidating around. So keep an eye on this too, because we get through there. I think that's another really positive sign for the economic modern family. This was another opportunity where you had a breakout over the 6-month calendar range, but it sat right on the 50 and held and then continued on its way up. And we really want to see this momentum not fail here down to the 50, but really start to escalate and go back up over that Bollinger Band. Now this one is the Industrial Select Sector XLI. Look at how beautiful this thing has been traveling. Again, you had consolidation, big move over the 6-month calendar range high. And you know these calendar ranges are good until July. And now we're making a new high here. We're starting to look like we could even better outperform the SPY to the point of breaking out over the Bollinger Band. And on the momentum indicator, we want to see a little bit more thrust of the momentum, but right now it looks like the momentum is trying to get over that Bollinger Band, which is very, very good. So again, unless this turns out to be some kind of an exhaustion top, this has been an area in the industrials. This is all based on reshoring that could continue to be very strong and then trickle into the economic modern families, because if industrials do well, then it's possible that that creates a cluster of prosperity, and then small caps start to do well, transportation does well, and the consumer continues to get the benefit of that. And last but certainly not least is IBB. So IBB looked like this thing was going to explode, right? It finally got out over the 6-month calendar range. It was like the last one, really, basically, besides KRE in the economic modern family. Had the inside day, and now it's breaking down a little bit. So biotech, right now, there's going to be pockets of strength and pockets where other drug companies aren't going to do as well. But clearly, Eli Lilly and Novo Nordisk, these are the big ones to be watching because of the diet drugs. But nonetheless, right now, this is a fake out. This is a reversal, what we would call a reversal on the 6-month calendar range, which possibly could mean trouble for this, just when it looked like it was starting to get going. 135 was where it broke out from. Let's call it 135.50 because that's your 50-day moving average. Here's your 6-month calendar range. Where would I get nervous about this would probably be if we spent a couple of days under 134. I'd feel better, obviously, if we can get back over 141.16. But we were starting to outperform this buy. We never see why these zero numbers and these Bollinger Bands are so interesting. We're now starting to underperform. We had the classic mean reversion right at the highs on that real motion, and now it'll get a real test here at the 50-day moving average, first in momentum and then probably in price. So that's why if you put all of these together, you can see we have promising sectors here. The industrials are key, but probably the biggest key right now, as far as if I had to pick one, would be the consumer, because if that continues to do well, that will drag everything up, and biotechnology will catch up as well. Thanks so much for watching, and bye for now.